All right. Back in the action here once again. It's about that time of day again here, folks. It's Tuesday evening. It's April the 9th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, remember, I help traders find predictable, reliable, profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best opportunities we see setting up for tomorrow. That's Wednesday, Super Wednesday's trading session. And my job tonight is looking at oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to jump in first tonight on the oil because the oil is setting up with a lot of what we're seeing here tonight. And then it's a combination of two very distinct patterns. Let's jump into oil here real quickly and take a look at that chart here together. Oil, as I mentioned, is setting up with those two distinct structures, two distinct trading patterns here tonight. You'll notice here we have that bear market coming down into quite the obvious range-bound market. You can definitely tell these markets are waiting for something tomorrow, right? We'll talk about Super Wednesday in just a moment. But you can easily see the market kind of settles in here, right, into a trading range. Now, put a pin in that idea here for a second because I'm also going to mark up these lows, bring it up to those highs, and create a hidden channel. And you're going to see a lot of these tonight where we have the combination of a range-bound market, right, into a trend into a range, and then combining that, right, with some sort of channel. You'll see a lot of this in tonight's newsletter. The bottom line is on crude oil tonight, strong bear move down into a trading range tells me I want to be a seller. I want to sell as this market goes higher. And to do that, I've got my eyes on the top of that hidden channel. And so I'd love to see us go a little bit higher so I can find some sell setups to sell off that high. I'm going to go into 3, maybe 4 different setups I'm looking for, along with what if the market breaks up and reverses and turns bullish. We're going to break all of that down tonight together here on this video newsletter, so make sure you stay tuned for more. Over on the S&P, here we go again. Another bear market into a trading range. Again, bear market into a range-bound market. What do I want to do here? I want to sell it, right? As it goes up, I want to sell it back down again. Where do I want to look for those sells? I want to look for them up around the top, right, of that channel. So once again, we're combining the trading range along with that channel. And again, I'm going to put together a plan tonight, 3, maybe 4 different setups we'll look for to sell off of that high. I'll also, of course, put together a plan of how we can be a buyer if the market reverses, or how we might be able to pick a bottom down here because, of course, you got that measured move just hanging out a little bit below us here right now. So I've got a bunch to talk about tonight on the S&P, so make sure you stay tuned if you're an Emini trader. Over to the S&P's cousin, the Nasdaq here tonight. Nasdaq, hey, here we go. Another similar situation here. We see a bear market overall into that trading range. That trading range, obviously, with that bear bias to it, tells me get up so I can sell it back down. I've got 3, maybe 4 patterns looking for up around these highs. And then again, right, we'll look at what if the market reverses. We'll put that plan together here today. And also, too, can I pick a bottom down here? Because you'll notice that measured move is sitting right below us here. So got a lot to cover here tonight on the NQ. So if you're an NQ trader, you'll love tonight's video newsletter. And then here we go. Different direction now, but similar situation here. Gold is bullish tonight. Nice strong bull run up into a trading range environment. Now, of course, that bullish market into a range tells me I want to buy a pullback, right? And I've got, you guessed it, right, 3, maybe 4 patterns to look for as we get that pullback. And of course, how do I know where that pullback will likely be? I've got a bunch of support levels on here. I got that little hidden channel, and boy, that hidden channel low looks great because it lines up so nicely with that reversal line. Look, they missed They missed that reversal line pullback by only a couple ticks, right? They went up. They got it earlier on this morning, right? They got that one right there, but they haven't come back to get that 1304. I'm going to put a plan together for whether or not we get a shallow pullback or if we get that full-blown pullback. And, of course, what to do if the market tanks right down to that big round number here or jumping higher, because we got some big news on the calendar for Super Wednesday tomorrow. I'm going to talk about that in a moment here, guys. Over on the euro, here we are again, right? Trend market up into what? Into a trading range. Good job avoiding that buy above that high. We talked about this last night on the newsletter. We didn't want to buy high here. Well, look what happened, right? They've got the bull market, right, into that trading range. What do I want to do now? I want to buy below that range. And look closely here. I'm lining up these highs. I'm bringing it down to that low. And oh, baby, that looks like a great level of support. But look closer here, because I got another key component on this. Take that trading range, bring it up, bring it down. Pendulum swing. Now look where that pendulum swing is. It's right on top of that reversal line from last night. Oh, yes, that looks great as a key level of support. How do we buy off that support? I'm not going to leave a buy order waiting there. I need to see a simple pattern to get in. We'll talk about that pattern as well as what happens if it collapses and reverses or if it pushes right through that high. So, got a lot to cover here tonight on this video newsletter. We got some euro, gold, Nasdaq, S&P, and crude oil. And we're going to break this whole entire strategy down for Super Wednesday in just a few moments. But before we jump in to tonight's video, I just want to make sure you never miss another great lesson here at School of Trade. And to make sure you never miss a beat, just join our mailing list. That's the easiest way to make sure that you get the instant access to everything new we publish here at School of Trade, whether that be our psychology videos, right, our newsletter videos, or anything in between. It's very simple. All I need is your name, your email address, and then hit that subscribe now button. And then heads up, guys, when you subscribe to the newsletter mailing list, you've got to check your email, check your inbox, because I'm going to send you a verification link to click on, and I'm also going to send you a welcome package with all kinds of goodies. That way you and I can get the most out of our time together. So don't delay. Join the mailing list. It's right here on the blog at sidewaysmarkets.com. And don't forget to check your email to make sure you get that welcome email. Now, how about questions, comments, concerns? I need your help. What do you like the most about this newsletter? What would you change about this newsletter? I always love your feedback, and it would mean the world to me if you would give me your feedback right below the video tonight in the comment section. You know, what's your favorite market? What's a market that you would hate to see removed from this newsletter, right? What's the chart that you always look forward to? What do you love the most? What would you like to remove out of this newsletter? And no, I can't remove my corny jokes, right? The trading jokes got to stay, right? I'm kidding with you. But give me some feedback in that comment section. And when you're down in the comments, don't forget, if you love the newsletter and you love the content here on the blog, give me a thumbs up on that YouTube video. It goes a long way with me, right, to help us get exposure to other traders who are looking to learn as well. So drop me some feedback in the comment section below. Give me a thumbs up, and don't forget to subscribe, right, to that YouTube channel. All right. Let's dive right in here. You guys are busy. Oh, one more thing too. Don't forget, you can always call me anytime you have any questions. Upper right-hand corner. I know that most people don't answer their phones. They text these days. But I'll tell you right now, we get so many great phone calls every day to the office. I love talking to new traders. So please don't be afraid to pick up that phone, call that toll-free phone number, or use that live support tool. I'd be happy to answer the call, answer all your questions, so you get the right information right when you need it. All right, let's jump in. So tomorrow is Super Wednesday. Now, usually we call this Wacky Wednesday, right? But tomorrow's been dubbed what's called Super Wednesday. And the reason why is because there is a hell of a lot of news coming out tomorrow at various times of the day. First of all, in the pre-market, right, in the overnight London session, you've got two big events happening. One is the ECB meeting and the ECB announcement. Okay, ECB meeting will wrap up. Usually it's about 7:45 Eastern time, and we have the announcement between 7:45 and 8, and then typically we have the press conference, just like the FOMC press conference, right? That will happen until about 9:30. So the ECB will start off with their meeting, their announcement, and their press conference, and that will usually take us all the way until about 9:30 Eastern time. Now, markets to watch for this are gold and euro, gold and euro, gold and euro, obviously pound, right? Any currency, any European-based currency, anything that is surrounding the ECB will definitely be on our watch list tomorrow morning. So ECB announcement tomorrow morning, careful with gold and euro, right? Obviously pound will be hooked in there too as well, the cable if you're a Forex trader, but be aware of that. If you're trading gold futures or euro futures, it's going to be real restless early tomorrow morning because of the ECB announcement. Now, that's not the only stuff happening in Europe, right? Tomorrow, we've also got that highly anticipated Brexit meeting, right? There's a whole Brexit vote scheduled for tomorrow. It's publicized. It's going to be broadcast. The last time they had this Brexit meeting, right, everything got all chopped up, all the currencies, right? Obviously, gold again. So keep your eyes on euro, right, and gold tomorrow morning. Now, that Brexit, right, that Brexit meeting could last all morning. So we're going to pay close attention to that once we get into our desk tomorrow morning, and we'll see kind of how that thing is progressing tomorrow. So that's all, of course, right? That's all in kind of the, kind of the pre-market tomorrow as we go into the U.S. session. Then we've got a couple more things happening right here tomorrow. Then we go into the U.S. session. The U.S. session, of course, we've got the 8:30 CPI number. This is a big deal, right? These are inflation numbers. So inflation always affects the money supply. Money supply is everything in the world of trading. And so CPI is a big news report tomorrow morning. And we, of course, will have a front row seat for that tomorrow at 8 o'clock Eastern time when we open up our trade room. Then we go down to the EIA, the Petroleum Status Report tomorrow. This is the weekly inventory report at 10:30. But be aware, tomorrow is, oh yes, there's more coming out. There's also the monthly oil report coming out from OPEC tomorrow. So not only do we have the EIA, the weekly inventory report at 10:30, but we also will hear from OPEC tomorrow morning in the wee hours of the morning about the monthly oil report. So obviously oil, right, is potential to be a bit of a rat's nest tomorrow, right? A bit of a hornet's nest tomorrow morning, right? It could be quite a choppy, sloppy session, right, for those oil traders. Bottom line, though, is remember, on Wednesday mornings, you really want to be careful, right? If you're trading oil after 10 a.m., right? Or sorry, you want to get to it before 10 o'clock or after 10:45. That's kind of always my rule of thumb when it comes to Wednesdays. And again, it's crude oil inventories. It's not for every market. Okay, it's just going to apply to oil, maybe a little bit of nat gas too, but stay away from nat gas. It's not a very reliable market. It looks fun, but it's not very reliable. It's very unpredictable. It's because it's so illiquid. But all you oil traders out there, tomorrow, your sweet spot tomorrow is that 10 o'clock to 10:45, right? That's the sit on hands, stay away from that market. And again, we get the monthly oil report coming out, right, tomorrow morning. Then as we go later in the session, as we go later tomorrow, in between the petroleum status report and the FOMC meeting minutes, oh yeah, there's more here. We have the, what are they calling it? The mega bank, right? The mega bank hearing. You know, politicians, right? They love to parade their ideas in front of CEOs and, non-politicians. So tomorrow, you're going to have that. You're going to have some front row seats. I'm sure it'll be publicized and televised. But tomorrow morning, all these moron politicians are going to ask these ridiculous questions to all of these non-politicians who will give them answers that they won't understand. It should be, at the very least, a lot of good comedy, right? At the very most, there will hopefully be some tradable opportunities that we get from it. I don't think I'll be tuning in too much during that session, right? Because we got so much else going on here. But be aware though, right? Tomorrow morning, there'll be that, all the news cameras, right? Because all the mega bank, the Wells Fargos, the Chases, right? All the big banks, all those banks that are supposed to be too big to fail right now, right? With all the regulation that made them even bigger and didn't help making them too big to fail. Anyways, they're going to be on the chopping block tomorrow morning, on the hot seat tomorrow on Capitol Hill, right? All the politicians with their, you get the point, right? So that's happening tomorrow. That'll probably be, 10 o'clock. They'll probably get started, and they'll probably go into the rest of the day. And then, hold on, we got one more here, and I promise this is the last one. This is the last one to finish up the day tomorrow. We've got the FOMC meeting minutes. Now, normally this wouldn't be a huge deal, but remember, the last time we heard about the FOMC, they were talking about lowering interest rates, right? They talked about the fact that they didn't see any rate increases till 2020. And that was why the market spiked, if you recall, right, from earlier on in the year. So the meeting minutes tomorrow, people are going to be digging through these meeting minutes tomorrow to figure out, are they really that serious? Are they really that serious about keeping rates low? And what's happened behind the scenes on that last FOMC meeting announcement. So, boy, oh my goodness. So whether it's right before the market with the ECB, the Brexit, you've got the inflation at 8:30, you got obviously OPEC, the monthly report tomorrow, the petroleum status report at 10:30, right? We got the circus, right? The circus coming to town, right? I'm sure all the politicians will get plenty of laughs. They'll try to get their votes, right, from making fun of CEOs tomorrow on Capitol Hill. And of course, right, we wrap it up with the FOMC meeting minutes. Wow, right? I need a shower after all this. What a crazy day we have tomorrow. This is why they're calling it Super Wednesday. So obviously, right, tomorrow could be a mess, but at the same time, tomorrow could be an insanely profitable, insanely busy trading day filled with patterns tomorrow. So I'm excited. I'm always somebody who believes never shy away from a trading day. I'm sure a lot of people would tell you right now, don't even bother trading tomorrow. But remember, to make your money every day, you only need what? You need one good trade. You need one good setup, right? And if you do it the right way with low risk, high reward trades, right? All you need is one, maybe two setups tomorrow, and we'll be fine with that. So that's the plan tomorrow. We're obviously going to do our best here tonight. We're going to put the whole plan together tonight on the newsletter, and we'll be keeping our eyes open tomorrow. But again, just be aware, we've got quite the hornet's nest getting pushed around tomorrow with everything from Brexit, ECB, OPEC, right? Capitol Hill, FOMC, you name it. All right, let's jump in. We got oil, S&P, Nasdaq, gold, and euro on the chart tonight. And again, as I mentioned in the introduction here tonight, we've got a lot of this combination of ranges, right, and channels. Now the ranges, whenever you have a range on the chart, ranges take precedence. So if I had to choose which is more important, the range or the channel, range all day long, all day long. So here we have a bear market going lower into the trading range. Now, you probably could also call this a triangle if you wanted to. It's all the same stuff. Anytime you have a triangle, there will always be a range involved, right? There'll always be some sort of rectangle in there, right? So make sure you find that range then. Once I have my range, do I have a bias to this? I do. I have a bearish directional bias. That bearish bias tells me I want to be a seller up at resistance. So I know we're bearish. I want to be a seller at resistance. Where can I find levels of resistance? Well, let's start first by talking about the range. I can take the size of that range, copy and paste that range up. That creates what we call a range expansion. Take it again. Do it again. That creates another range expansion. Now, typically, unless the range is really, really small, this one's not that bad, but we've seen smaller. If it's really small, you would go one more. right? So sometimes when we see really small ranges, I'll put 3 levels on here. Doesn't look like that will be the case right now, but just so you know, right? Sometimes I will add a 3rd one, and we'll talk more about that, right, in our membership classes. So I find those levels of resistance above, and don't forget, that applies down here too, right? It applies as we go lower, right? There's support, and there's support. Okay, now, what is really interesting about a range is that I can also take the amount of the move below the range, and I can project that now above the range. Now, usually you can kind of eyeball this, right? If we go below the range, right? If I go below the range, I think that pendulum will likely swing back up around the top of that range. That gives me another area there to be looking for a level of resistance. Now, at the same time, we have our range that's giving us levels of resistance to work with. What about the channel? This is where the magic happens. I can take out my channel line here, draw off of those lows. You know, most people, when they think about drawing channels, they draw them like this, right? There's your channel right there. And yeah, that is a channel. The problem is that channel is very narrow and it doesn't give me very much space to trade inside of it. What I'd rather do is find a better way to use that channel to give me a low risk, high reward opportunity. So I find a hidden channel. And this hidden channel will allow me to take a small amount of risk, right, for a much larger amount of reward. This is one of the big reasons why I like to use these so-called hidden channels. So we've got plenty of resistance up here. There is no doubt about that, right? Plenty of resistance. I've even gone in and found that trend line here, right? Draw off that trend line coming up, and that can be used as a key level of resistance. So we got no shortage right now of resistance levels as we go higher. So I want to go up and I want to sell this market back down again. I want to stay out of the middle, out of the no trade zone. And if I can, I wouldn't mind buying this market as we go back up into that range. So what are a couple different patterns that we can look for on this? First of all, let's say we do get that move up into that battle zone. Boy, that's going to feel like a very bull market, isn't it? It won't be bullish yet, and we'll talk about what a bull market will look like in a moment. But what I want to see, though, is I want to see those buyers now try to buy that pullback. See, if the markets are anything like they were when I was a kid, right? When I was a rookie, I used to get trapped on this stuff. I would get fooled in this all the time. Price would go up. I would think it was bullish. I'd buy a 38.2, a 50% pullback, and sure enough, what would happen is it would fail. It would fail because I was buying the high in a bear market, right? Not a great place to be a buyer at the high of a range in a bear market. So what I want to do is I want to anticipate those buyers are going to at least try, like I used to do when I was a rookie, and I want to try to sell right into those stop losses. We call these failure patterns. They're very, very simple patterns, right? Price goes up, the buyers think it's bullish, they try to buy the pullback, right? And they fail, and the market collapses back down. That's a failure pattern. Now, once we see the market collapse back down, I don't want to chase after it because remember, you got that range down here. I don't want to sell into that low. So what's a better option? The better option is to wait for the pullback, right? The pullback pattern is usually a very, very common and reliable pattern where it'll pull right back to almost where the point of entry was for the failure. So those are two easy patterns we can use, right, as we pull up and as we come back down. Now, what do we do if this market slides back into that range and goes sideways? Then what do we do? What if we're back in this range here right now? What's the plan then? The plan doesn't change very much. I still want to sell above the range, and to do that, I'm going to use those range expansion levels, combine that with the top of that channel, and we use a very specific pattern called a two-try failure pattern. We wait for the buyers, try to break out. We let them try to buy it again. This counts now as one try, two try, and then I sell once I get a nice strong signal back down into that trading range. It's a bear market. So if the buyers are foolish enough to try to buy above that range, I'm going to wait for them to try to buy it twice, and sell into their failure. Now, what if we went lower? What if we jumped into the range down here and then we shot lower here? Could I buy this thing? I can, but I have to use a slightly more advanced setup, and it's called a nested reversal pattern, right? It looks like this. As we go lower, remember the market's bearish now. So what's going to happen? As the market pulls back, the sellers will try to sell the pullback, right? But then if they fail, they're probably not going to give up after one try. They're going to probably try it again. And that's exactly what I'm waiting for tomorrow. I'm looking for the sellers after we see that strong move down. I'm looking for the sellers now to try twice, and then I can buy into those stop losses, right, as we run higher. That's the secret. The secret is, again, if we go up because the market's bearish, I can sell into a buyer failure. Right? The buyers aren't going to try and keep trying to buy that pullback because they're against the trend. But if the market drops here now, I have to expect those sellers will try once, they'll probably try twice, and then I can start looking for that buy now going right back up into that trading range. So now we've talked about how to sell off the high, how to buy off the low, and how to trade that range breakout failure, right? What would a breakout look like, by the way? Well, I need to see what I call a 1, 2, 3 breakout. So a 1, 2, 3 breakout. What's a 1, 2, 3 breakout look like? Well, it's just like the name sounds. 1, strong move up. 2, pull back to the moving average. Now, at this point, we're looking for that up and failure, right, back down in. But if the buyers can hold that pullback and through, the key here is a real strong jump off the moving average. If the buyers can prove to us they're taking it higher, now I can go out, mark up that high, find a new channel, and buy the low of that channel. I'll tell you, reversals and breakouts take patience. Patience is the magic word when it comes to breakouts, because a lot of breakouts, well, as you can see here, right, a lot of breakouts, they're going to fail, right? They're going to go up, you'll see them try, and they'll fail right back down in. Okay, so we have to wait for that up, pull back, go, bingo, mark that high, mark that new channel, find the new hidden channel, and we're buying off the low of that hidden channel. All right, guys, we'll be tomorrow morning. Don't forget, in our trade room, 8 o'clock Eastern time, and we're going to put this plan together. You want to learn more? Want to learn all my favorite patterns? How about the 3-step strategy? You know, I use a simple trading strategy that has 3 simple steps to it. I'd love to teach you more about it. And to do that, enroll in our free trading class. In the upper right-hand corner, I'll put a big pop-up that pops up there. I'll also put a big red button below that video tonight, right, on our blog. Either one of those will work. That will get you enrolled as a member of our free trading class, and you can learn all about patterns like the 2-try failure, the 1, 2, 3 breakout, the nested reversal. Everything's covered right in that free course. So grab the free course. You'll be happy you did, and I'll see you inside the members section of our website here at School of Trade. Let's keep going. Next up here, over on the S&P. Now, I'm going to be a little bit of a broken record here because a lot of these are going to be very similar. But now you know the basic fundamentals. We have a bear market into a trading range. What does that tell me? It tells me get up and sell it back down. It also tells me I can buy, right? But I have to be what? I've got to be patient. I've got to be careful trying to be a buyer in that bear market. I also know I can connect these lows up to that high and create that hidden channel, right? That hidden channel lines up perfectly with those range expansion levels that I mentioned earlier. So this is a real good hot spot here, right, as we pull back higher here. If we sit right in the middle, we stay out of the middle of that range. And if we go lower, don't forget we've got a big measured move target waiting down here. And this may be all we need to go down. And then 1, 2, you got it, right back up, right into that range-bound market around 28.80. So now that we know the basic idea, right, we're bearish. we're into a range. We've got a range expansion. With that range expansion, I've also got my hidden channel. What's the best pattern here? First of all, we go up. Let those buyers, right? Let them try to buy the pullback. We wait for those buyers trying to buy that pullback, and we what? We sell right into those stops. Moving average comes over. We don't chase after it. We wait for the pullback. That's a failure pattern into a pullback pattern. Very, very easy setup. We may also see, as I mentioned earlier on oil, one leg, two leg, draw a trend line up. That might be the spot here for that 1-2 try for you, right? Think about it this way. That can also be included there as well. Same basic idea. We go up, the buyers try to buy the pullback, we're looking to sell into their failure, and I can get an edge up on the other side of the market by using that trend line. We call these two-legged pullback patterns because of the two legs, one leg and two leg. You'll learn all about those patterns in that free trading class that I just mentioned a few moments ago. Grab that link in the upper right hand corner or that big red button below the video tonight on our blog to learn all the details. So again, I want to go up, let those buyers try, let them fail so I can sell into their stops and then pick their pocket right on the pullback as we go. If we sit here in the middle of this range, I want nothing to do with it, but I will use that 1, 2, failure, right? Let those buyers try once, let them try twice. You'll see these patterns all day long in range-bound markets. Then with the right signal, we'll sell the sucker right back down into that trading range. What if we go lower here? Right? If we go lower, I don't want to sell low, right? We get a measured move down here, range expansions down here. As we go lower, what are we looking for? I don't want to be too aggressive. I want to let those bears try once, let them try twice, then I'll start looking to be a buyer and heading back up into that trading range. Now, keep in mind, there are some nuances of this, right? There are some nuances of this. For example, I always like to make sure that I get a pullback to the moving average, right? So as we go lower here, right, it's 1 off the moving average, 2 higher high. There are some nuances, right, to this 2-try failure, this nested failure. And again, you'll learn a whole lot more about those nested patterns in that free course as well. Don't forget, what's a breakout look like? Breakout, 1, strong move up, 2, pull back, 3, breakout off the moving average, right? It's got to jump off that moving average or else you can't trust it, right? We see this all the time where it'll go up, it'll pull back, it'll look very promising, but sure enough, it'll end up right back down again. So make sure they jump off of that moving average, then grab that high, grab that low. Notice how I draw it down here, right? I don't draw it off that low. I draw it off this low. That's what makes it such a hidden level, right? Those hidden channels. Then we know where our sweet spot is, right? Right there. Looking to buy that pullback and go up to retest those highs from there. That should be a relatively easy setup. But again, when it comes to breakouts or reversals, what's the magic word? Patience, right? Patience is where we want to be tomorrow. And again, talk about patience, right? If it's nasty, if it's all right, if it's all chopped up, we will stay patient because all we need tomorrow, right? What was it again? We need one good setup, right? And then once we get that one good setup, what do? We look for another one. Simple as that, right? We don't come in every day thinking we got to take a dozen trades today. We come in every day thinking, I'm going to go find this first good setup right now. Once I find that setup, then I'll go to the next one, right? It's much easier to tackle one trade at a time. And that's exactly what I kind of do to coach my clients on days like tomorrow, Super Wednesday. We have quite a bit, right, expected to be happening tomorrow. Over on the Nasdaq, again, a little bit of a broken record right now, but very, very similar situations here. We have a bear market here today into a trading range. Take that range, find my levels of resistance overhead. I want to sell up at those levels of resistance. What else do I have here? Mark up those lows, up around those highs. That becomes a level of resistance, and you'll notice it all comes together at the same spot. Great spot. So again, if I can get this market now to go up, I want to see these buyers try to buy the pullback. Again, price will go up. Moving average will come over. Buyers will now try to buy that pullback. We now know where their stops are. It's a bear market. It's not a bull market, and we'll sell into their failure. From there, we wait for the moving average to come over, and we sell that pullback. That pullback, amazing. It almost always comes back right to that point where the original entry was. So grab a quick first target on it. Right? Quick first target on it. An easy way to do it is the size of this move is the size of that move. We'll talk more about that in our free trading classes, right? It's all based on the market's volatility. You'll learn more about that, right, in our membership classes, but we'll talk more about that tomorrow. Right on the news. I know I'm taking more time right now than I should be right now. So I want to make sure to get the rest of these markets here for you tonight. But the bottom line is that we want to go up to try failure, right? Let those buyers try once. Let them try to buy off the moving average and sell right into their stop losses, right? Also, don't forget that two-legged pullback pattern. 1, 2, draw that trend line up. And then this can be used as a level of resistance as well. We call these two-legged pullbacks because of 1 and 2. So these are the simple patterns we're watching for tomorrow. And again, if we end up right in the middle here, what do? We sell high, we use that 2 try failure, right? The 1, the 2, and the back down, right? Let the bulls try once to break out. See, the reality is when the buyers try to break out, they'll be pullback buyers, right? And they'll try it again. So you don't want to sell the first one, right? You want to wait for that second one to try, because again, it's the pullback buyers. We're trying that, then wait for that big signal candle, right, and drop it in. And again, I talk about all of these patterns in that free course, upper right-hand corner, right, or in that big red button, right, part of that free course. So if you want to learn more about all these patterns, I'm giving you a basic overview tonight. But we'll do a much deeper dive into those patterns, right, in that free trading course. So grab the information icon in the upper right-hand corner or the big red button below the video tonight on the blog. What I love about this chart, though, is you've got that measured move right there. That measured move is sitting there right at that 75, 71 area. So that's right below this range. You'll notice it lines up right with that range expansion area. So I like it when I have a chance to buy, but I got to wait for go down. Remember, the market's bearish, so there's a good chance they're going to hold the pullback and keep going, right? And we know what the plan is at that point, right? It becomes a 1, 2, 3 breakout. We mark up that new channel, right? And we're selling the high of that channel, right? So if they do hold that pullback and we do get that 1, 2, 3 breakout, then we know the plan, right? We're not trying to chase after it down here. We're trying to wait for it to come back. Again, you always want to make sure you sell at resistance in a bear market. If I try to sell down here, what happens is now my stop has to be way up here, right? Which means this could come all the way back up and stop me out, or come all the way back up, make my life miserable before it goes back down again. It's much easier just to go out and just draw the hidden channel, right? And just sell it at a better price, right? Don't chase after it as it's going lower. Chasing after the markets are for rookies. You're watching the best newsletter on the planet. You are no longer a rookie. Okay, you are well educated at this point. Trust me, if you're tuning into this newsletter right now, you're more educated than a lot of traders, right, in these markets are. You are 100,000 times % more prepared than I was when I was in your shoes, right? So be confident out there. And again, don't forget, the strategy is real simple. It is. It's a very simple strategy, the 3-step strategy, which you'll learn in our free trading course, which I plugged a couple times already tonight, right? The strategy is very simple. What is not simple is sometimes the markets get really fast. Sometimes they get really sloppy. Sometimes there's news events that come out. And sometimes we do things like chasing after markets, revenge trading. Sometimes we do things that we regret. And it really helps to have somebody going there with you so you can kind of bounce ideas off of and really, someone like me to help you help hold you accountable, right? Because the strategy is easy. What's not easy sometimes is us making split-second decisions right? Us dealing with risk and reward. And of course, sometimes the markets aren't very simple, right? Sometimes they're pretty complicated, right? That's what makes trading difficult. It's not the strategy itself. It's the markets that get moving sometimes. Okay, so bottom line is we go down. What's the pattern? How do we buy it? 1 try for the bears, 2 try for the bears. And again, notice how I draw this, right? There's 2 separate tries here. The second try is higher than the first try. We'll go into a lot more details on all the rules of this nested reversal pattern. We'll talk a lot more about that in our membership classes, and I go over all the fundamentals right inside that free trading course. Okay, so Nasdaq is all set to go here. How about some gold right now? How about some gold? Gold is almost identical, but the opposite direction, right? We got a bull market now going higher into a trading range. I take that trading range. I find my levels of support, right? Pretty easy there. I also, of course, can take that channel, bring it down, and boy, oh boy, that lines up nicely. This also brings me right to this reversal line. This reversal line, they missed that reversal line by a couple ticks there, right? They literally missed it by a hair or two. And so oftentimes that is unfinished business. So I'd love to get this thing to really nosedive and then pull up right out of that nosedive, which reminds me, you know, what would be the best pattern if we go all the way back down to that low? That's going to be a pretty deep pullback, right? It will. It's going to be a pretty deep pullback on that. And, well, for example, right, look back here. Really deep pullback. What happens? The bears try once. They try, and then what? Right up. Hey, wait a second. We just talked about that pattern. You're exactly right. That's exactly the same pattern I'm looking for here. So if we get this really nosedive here, right, if it really starts to spiral lower on this, because what will happen is it'll look really bearish, right? It'll dump. And when it does that, don't get spooked. Just stay patient. Let those bears try it once. Let them try twice. Make sure, like back here, right? Make sure you get a higher price, right, on those 2. I'm not going to give away all the secrets of this, right? I'll make you join that free course to learn all the details about this pattern. But strong move down, right? 1, 2, I want to see bears try once, bears try twice, and you'll see it, right? You'll see a big, fat, juicy candle on that, and that's when you know it's ready to rip back up to retest that high. Now, we may not get that deep of a pullback here, right? It may end up doing something shallow, right, where it pulls back halfway. It runs back to the moving average, right? The bears now try to sell it. Same pattern here, right? The bears try to sell off that moving average. Oh, your stop's hanging out. I know where your stop is right now, and if we fail, I'm going to buy right into that stop loss using that failure pattern. Now, from there, I don't want to chase after this because it's not a good idea to buy towards the high of that range, right? We want to buy at support. So what do? Wait for the pullback, right? And we buy the pullback from there, right? We buy that pullback coming up right from that high or from that pullback right about at that point of entry where we would have got in right earlier. Also, don't forget, as we go lower, watch this trend line. This trend line may end up becoming our best friend here for this as well. So keep your eyes on that trend line as it comes down. So we're looking pretty good as the market pulls back right now. What if it gets stuck inside the middle here? You know, again, this is gold we're talking about. We got ECB, we got Brexit, we got FOMC, we got CPI tomorrow morning. CPI, FOMC, Brexit, DOE. I mean, come on. How many more acronyms can we talk about tonight on this darn newsletter? But the bottom line is gold might be a little bit weird tomorrow. It may get stuck right in the middle of that range. What do? If it gets stuck in this range right now, what do? You let them try once, let them try twice, right? Let them try once. Okay, don't buy that first one because what's going to happen is you'll see pullback traders try to sell the second one. Wait for that second one and then look for the run. Now, the problem you're going to deal with in this one, though, is you don't want to buy into the high. So you've got to be careful when you get these failure patterns here. You know, for example, right, we saw this one here. 1 try, 2 try. That's not a very desirable failure pattern right there. It's not, because you're buying right into that range top. What you really want on these ranges, you want to get out. Let those sellers try to sell it, and that way you've got, you know, like I mentioned earlier, you always want to try to put yourself in a position where you can take a small amount of risk for a much larger amount of reward. See, if I get a deep pullback, that gives me a great risk to reward. And the reason why this is so important is because when there's a big reward on the chart, on that setup, you're going to attract the big fish into that trade. And when you trade alongside the big fish, right? I mean, they talk about this like in trading 101. This is beginner trading stuff, right? You want to be a fly on the back of the elephant. Just hop on for a ride, right? That's the way. We're not going to move the markets, right? I would imagine probably if we took everyone's buying power right now, watching this video right now, we probably still wouldn't be able to. Think about it. You know, the OPEC cartel. The OPEC cartel is one of the most wealthy, right, cartels and private organizations in the world. And can they manipulate the price of oil? Not very long, right? They've tried, obviously, but even they can't hold back the markets, right? So you're not going to move the markets alone. You've got to, again, the analogy is be a fly on the back of the elephant, right? Pick your elephant, make sure you find the right elephant, right? Going with that trend. I want to find a big reward because a big reward is where the big elephants, right? Where the big fish are going to be attracted to. And when you trade, when you're a fly on the back of that elephant, right, you get a much higher winning percentage. And that's what makes successful traders. What makes successful traders is a high winning percentage. Okay, don't get wrapped up in the idea of getting a 5-to-1 risk-reward ratio and a 30% winning rate. You know what I mean? There's a lot of strategies out there where they say, well, yeah, it's only a 30% winning ratio, but it's a 5-to-1, so you can do that. That makes money. It makes money on paper, but the reality is I've met a lot of traders in my life, and they're all one thing in common. After you take a couple back-to-back losses, you're not going to keep trading that strategy. In my experience, the key to success in working with tens of thousands of new traders is a high winning percentage. Because if the winning percentage is high, if there's a high level of confidence that each trade's going to be successful, with every once in a while there's a loss, okay, that means you're going to be confident. You'll be trading it not too aggressively, but confidently, right? That's what makes a successful trader. Be very careful about those trading strategies that promise a 5-to-1 risk-reward ratio, but they only work 30% of the time. That means that you could possibly take 6-7 consecutive losses. I don't know any human being, again, looks good on paper, I don't know any human being that will take the trade number 3, 4, and 5 after you've taken back-to-back losses. Very few people. A computer would do it. It looks good on paper, but real traders, real human beings keep the winning ratios high because that builds confidence, and confidence is the grease on the wheel for a new trading career. We'll talk a lot more about that topic inside that free course, but that's exactly why I like to look at those deep pullbacks. Now, as we go higher here, okay, we're obviously bullish here. What do we have to worry about as we go higher? Because if we break out, what are two patterns to look for? One is called the 2-try breakout. You ready? We go strong move up, real strong. 1, 2, trap low, and buy. We call these 2-try breakouts. They're breakout patterns, right? The other one would be, right, and you're buying that trap there. Okay, very aggressive pattern. The other one obviously would be the 1, 2, 3 breakout. That's the one that's most reliable. That's the one that most people will take, right, as a new trader. Right? But again, you see a real strong move up, let them try once, let them try twice, and make sure you get that trap, because that trap is going to be where all those sellers get wrapped right in, and then once you see that nice green candle there, boom, right? We're running those stops, and the market will likely rip higher for one more leg. Now, if we don't get that breakout, we go up. What's the best pattern to sell off this high? Remember, we want to assume, right, the buyers will try once, buyers will try twice. Yeah, you got it. It's that same pattern we talked about if we get that real deep nosedive, right? We go up, counter trend. 1, 2. Make sure you get the buyers now trying lower, right? Lower second try there, and then we're dumping it back down into that trading range. So again, kind of a broken record here on the gold, but again, the opposite direction now. And remember, wait for those deep pullbacks, because those deep pullbacks are going to make all the difference in improving your winning ratio, right? Winning ratios are most important. All right, let's wrap up here tonight. On the mighty euro, boy, that euro really was messy today. You can definitely tell they're waiting on something. I mean, think about it. You got the Brexit vote tomorrow. You got ECB tomorrow morning, right? I mean, tomorrow, again, it's they're calling it Super Wednesday for a reason. The bottom line is on the euro, we got a big bull move up into that trading range. You know me. I want to find those levels of support below the range, and I want to buy below that trading range. Okay, so pretty typical here. I mentioned this earlier, right? We have the amount of the move above the range. There's my trading range right there. I take the amount of the move above the range. I project that down, and that puts me right on the pendulum swing, right? Now, that pendulum swing is very interesting because you'll notice not only does it line up with these range expansion levels, it also lines up with this reversal line. This is the reversal line we talked about last night on the newsletter. And then as if we need some more down here, line up those highs. And guys, what I'm really doing is I'm drawing this one to that high. That's all I'm doing on that, right? There's no magic wand to that. All you do is you find the first high, then the highest high, right? So you're connecting these two highs right there. That's all I'm doing. Connecting those two highs, right? I'm kind of ignoring these right there. I'm just connecting those two highs. And then, of course, the good rule of thumb is if you're drawing your channel off the wicks on one side, it'll usually be off the bodies on the other side. You'll notice I'm shaving off those wicks and drawing off the bodies. I'll tell you, I have a lot of tricks up my sleeve, and I'll teach you all those tricks as a client of mine, obviously. I give away a lot of tricks in that free trading course I mentioned earlier. But again, right, tricks on how to draw the right channels, right? Usually you draw that channel off the wicks on one side, the best fit will be off the bodies on the other side, or vice versa, right? And we'll talk more about that in our membership classes as we go deeper into drawing channels here. So boy, oh boy, right? Nice big bull market into a trading range. I want to buy this thing as it goes lower. How do we do that now? Got my pendulum swing on here. That looks good. Okay, so I know exactly where, right, I want to get this going higher here. What's the best pattern? It looks to me like we're going to have a trend line coming down. So we're probably going to want to go down, get back up, and use that trend line. That's probably going to be the bread and butter. That's going to give you one of those low risk, high reward opportunities that, again, attract the elephants. Right? They attract the elephants, and we're going to jump on the back, right, of that elephant. That's a good way of thinking of it with that nice deep pullback. In all reality, though, if this market goes sideways here for a little bit longer, that will disqualify that trend line. And then, of course, from there, it's a 1, it's a 2, right? It's a 2-try failure, and then we can buy back up from there. Now, what if we try to go higher here, right? So we know if we pull back, again, looking for that 1, 2, again, failure into pullback and go, right? So even if we do have that trend line coming down here, I can use that trend line as a two-legged pullback. I can also use it in combination with a failure pattern, then of course that pullback pattern as we go. We're going to do this together tomorrow in the trade room, so not to worry, right? If you'll be there with me, 8 o'clock Eastern time, right? We'll do it together. If we sit inside the range, be careful. 1 try, 2 try, back up, right? What do we break out? What's a breakout look like? Breakout, right? 1, 2, 3, breakout. Strong move down, pull back to the moving average, jump off the moving average, find that low, find that high, and we're selling off the high here. Where's our target at that point? All the way back down to retest those lows, all the way back down to basically where that party began, right, on Monday morning. So again, if we do get this strong move down, let them see proof. If not, we're buying right back into their stops. If they do hold it and we see proof, wonderful. Now find that new channel, now mark up that high, and now we'll sell right off that high. What about going higher here? Going higher here, we got some definite space to go higher here. Plenty of space to go higher here before we really have to worry about this. So as we go higher here, 2 patterns, right? Strong move up, real strong. 1, 2, trap. Okay, the key is the trap pattern. Again, strong move up. Got to be real strong. Then Bears try once, bears try twice, trap low, booyah, big move up from there. Okay, all those sellers will be trapped and they'll have to get out for a loss and the market will rally higher from there. Or more conservative, 1, 2, 3, you get the picture, right? Find that hidden channel and we're buying the low of that hidden channel. All right, guys, once we know more information tomorrow, we'll find our targets, right, using extensions, using measured moves, and prior range tops and bottoms. All right, guys, super Wednesday. I have a funny feeling tomorrow will be a very good Wednesday. Again, don't let anybody tell you can't trade these markets during times like this. Right? We'll find a way to find that one good setup tomorrow. Then once we get that, we'll find our second good setup tomorrow and we'll do it together. That's right. Every morning we get together 8 o'clock Eastern time and we execute the plan together. Hope I see you there with me tomorrow morning, bright and early, 8 o'clock Eastern time. And don't forget, grab that free trial, right? That free trial is right there, just to the left of me here, right on the website. Join our beginner, intermediate, and advanced classes. Use that live support tool right below me tonight on the video if you have any questions. And as always, I love your feedback. Post those comments in the comment section below. And enjoy the rest of your evening. We get some work to do tomorrow morning. I'll see you guys bright and early at 8 o'clock Eastern time. If not, same time, same place tomorrow. Once that dust settles, we'll put the plan together tomorrow night for our next edition of our nightly newsletter. As always, guys, my name is Joseph. Thank you so much for spending the last hour of your time with me. I know how difficult it is for me to find a free hour in my day every day. So I appreciate you being here. You are no longer a rookie. Right? You are highly educated, empowered to make successful opportunities happen tomorrow morning. Hope I see you there with me. If not, same time, same place tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other and be here next time. Adios, amigos. Bye-bye for now.